This goes back to Babylonian times and the sort of the way that we, in fact, pre-Babylonian, as he would say, you've got so many moving parts from a societal level, from a cultural level, from a technology level, that it really is, the history of money is the history of humanity as well.
Hi everyone, this is Sudeshna from The Abundant Psyche, and you are listening to the Not So Corporate podcast. Here we talk about all those not so corporate things that corporate entrepreneurs do within and outside of corporate life. And today I have with me my colleague, Nick Holland. He's the Global Head of Research from Money 2020, and he spent about 20 years in the fintech industry. So he is the real deal when it comes to being an expert in the ecosystem. So I'm really excited to talk to Nick. Before passing it over to you, Nick, I'll just read a bit of your bio to the listeners. Nick has been focusing on the intersection of financial services, fraud, identity, and technology since 2001. And his clients have included card networks, payment processors, technology vendors, mobile operators, social networks, government agencies, and more. And he's spoken and chaired a variety of conferences, including Mobile World Congress, Money 2020, before he joined us, Next Bank, SXSW, and appeared in publications including all of the big names: Wall Street Journal, CNN Money, NPR's Marketplace, Forbes, Fortune, Business Week, Time Magazine, Economist, Financial Times. Nick, I'm so excited to have you. Welcome to the show.
Thanks, Sudeshna. I'm very pleased to be here. Thanks.
So exciting to have you. Nick, if I just started off with your view on the fintech ecosystem and how you have seen it evolve in the last few years, what would you say?
You mentioned I've been doing this for 20 years, and it's a very different place from where we were 20 years ago. But having said that, there's a lot of things that haven't changed that much as well. So it's this weird sort of two-horse race in fintech and financial services, because you always have technology evolution. You have, obviously, in the last 20 years, we've seen the emergence of smartphones and social networks, and obviously blockchain and NFTs and all that stuff. But so you got that on one side, you've got this sort of innovation from a tech side. On the back end, you've got an industry that's very pedestrian when it comes to evolving from traditional payment networks, from things like look at any wallet you've got, you still see a magnetic stripe on that card. So it's like on one end of the scale, you're at the sharp end of really fantastic technological evolution. On the other end, you're tethered to, again, 50-year-old, 60-year-old systems that are just pervasive in everywhere. So it's a fascinating time. And like I say, I've sort of seen the evolution of particularly things like mobile payments, mobile banking, and obviously everything that goes around that. And clearly the last couple of years have been something of an accelerant in terms of some of the things that I was pushing for 20 years. And who knew the catalyst would be a pandemic? But like I say, there's a great deal of innovation, but it's also within the confines of a lot of cultural norms and traditions that are in some ways, I wouldn't say stifling adoption, but they're nuances you have to consider in sort of the entire picture there.
Yeah, it's interesting that you mentioned the pandemic. Do you want to maybe tell us a bit about what is the shift that the pandemic brought about that maybe someone like you had been pushing for 20 years and then the pandemic changed everything?
Well, the first exhibit A is this: none of this exists, right? I'm living in this sort of virtual space now. We all are. It's all a bit of smoke and mirrors. Clearly, it's evolved the way we work and the way we live in a fairly dramatic manner. But I think that in terms of from the payment standpoint, certainly things like contactless payments and the ability to bank or pay anywhere have again had to evolve leaps and bounds because people couldn't physically go to a bank branch. So there's some sort of square peg round hole solutions there. You're seeing a lot of QR codes that are not the best technology solutions, but they are readily available. And I think it's clearly necessity is the mother of invention, right? So you've had to, in a lot of cases, just deal with that. If people are working remotely, you've got to evolve things very quickly to obviously embrace that new scenario. So it's been, I think, an eye-opener for a lot of institutions that were probably more pedestrian, that were more, I wouldn't say handcuffed, but certainly bound to traditional banks and bank branches and so on. And again, you see that in the retail space as well. I mean, the retailers that didn't necessarily evolve their digital channels probably had a harder time than others. But I think for a lot of companies, it's been something that they were on this trajectory anyway. And this has just sort of accelerated what they were planning to do in the next 3 to 5 years. So they just had to compress the timeline within a couple of years.
So on that is really interesting, because for the first few months of the pandemic, at least, I think all of us were dealing with, I don't even want to touch my credit card to the machine. So that's what we sort of dealt with. People were going cashless. My parents almost went cashless. That's a big thing.
It has been, yeah, like I said, I was looking at contactless technologies back in 2001 I did actually my master's thesis on contactless payments, which was a little before it was ready for the market. And I spent probably the best part of 15 years after that trying to push for when are they going to happen, and we brought out Apple Pay and so on, but there still really wasn't that use case until, like you say, the pandemic. You didn't want to touch it upon a cell terminal, you didn't want to touch an ATM, you didn't really want to go anywhere near physical paper. In fact, I can remember clearly, probably the middle of the pandemic, sudden craving to go and get a hot dog from a street vendor. Had to pay with cash, had to go and get some cash out of the ATM. And it was like holding someone's face mask. It was like just this sort of limp note. And I was like, this is eating street hot dogs. But then, even if you can't trust the notes, it's a strange feeling. So, and I think we maybe got over that germophobia a little bit, but it's a lot of it's about muscle memory when it comes to payments, right? So it's habitually now, I don't even bother reaching for my wallet. I'll grab my phone and use that to pay. So it's something's changed in terms of the mechanisms of payments. I can't remember, other than the hot dog incident, the last time I actually held physical money.
Yeah. Got it. So do you feel like we are already at that point where we are reaching a place of, if some businesses don't cope up or step up or change their tech stack, they will perhaps start dying off? Or are we still a few years away from that? Do you feel like that point?
Yeah, I don't, again, like I said, I think it's going to become cumbersome for some businesses that want to deal, predominantly in cash or checks. And I think the US is probably a little bit behind Europe when it comes to, the evolution of payments. But I think from two things, from an inclusion aspect, you've got to consider that not all people are that tech savvy. So to force kind of a transition to digital, and that might even include card payments, might be something they don't want to do. The other thing is, again, it's just like I say, there's this sort of very strong legacy tradition of analog payment mechanisms that's still very pervasive. It's still, people don't trust necessarily the lack of anonymity you have with electronic payments. There's a lot of people who would prefer to use paper cash for whatever reasons. It's the dollar bill is a reliable universal mechanism of trust. I think if I'm going to jump to a neo bank with a name that's maybe an acronym or something a bit funky, I don't, as a consumer, necessarily know that is legitimate, but I do know that the bank down the street from me, it's got sort of the Corinthian columns outside. It's got bank vaults. I can see there's people in there. There's a trust in the traditional, and it's never more present than in something like, I'd say, maybe a few industries, certainly payments, maybe healthcare. You want to make sure the hospital is legit. Things that are really going to materially impact you if they're not legitimate, I think you really do need to, like I say, there's still a requirement, and this is the incredible balancing act that a lot of organizations are dealing with today. They can't go too digital because they're losing that, I guess, heritage and pedigree that they've cultivated maybe over even centuries if they do so. So it's a really fine line between this sort of digital transformation, but not too far, and finding, I guess, that sort of Goldilocks zone between not too digital and not too analog. And here's the other thing as well, it's changing on a daily basis. So what your customer base looks like today could be very different in 6 months' time, given, again, the generational shifts and so on.
Yeah, exactly. And I think you throw into that things like security, like cybersecurity.
Yeah.
Like one of the reasons my dad never trusts ATM payments, my God, like I don't know how the man lives without a card in 2022. But anywho, there are still people like that, and they won't trust the system because he's afraid that his card thing might get hacked. Sure, yeah. But so can his bank get hacked.
It's also worth noting for our kind of collective reliance on things like mobile technology and cell towers and all that kind of stuff. It's not very difficult in America to find places where you've got no cellular connectivity or you've got no internet access, and you have to have the legacy systems in place because, like I say, literally some places, and I don't think you can go very far from here. You're going down to sort of far more basic mobile networks. You're not going to get any coverage whatsoever. So you need to have that fallback on things that will work in an offline environment as well.
Yeah, I agree. shifting base slightly onto Web 3.0, I have had a couple of people on the podcast before talking about blockchain, but not really from a financial services perspective. So, real for dummies, Nick, what on earth is Web 3.0?
Good question. So I'll do a very brief history of Web 1 and Web 2, if we may, so which will get us to where Web 3 is. So, and I'll kind of try and keep this as succinct as possible. So if Web 1 was the golden age, but the first era of the internet, where, if you can remember this, like I can, in the sort of the late 90s or even mid 90s, you'd have these screeching modems that would download web pages in chunks, right? And it would take possibly 30 minutes to get a decent page down. So the idea of it being a channel of communication was just done. It was almost read only. You would see web pages. Yes, there were email services, but you would send an email, no idea whether the other person was online. So you might get, it was much more like physical mail, right? It was slightly quicker because it's digital, but you've got to rely on the other person probably not being online at the time you're sending it. So it was also fascinating time for the experimentation, and it's really a time when the internet was owned by its users, right? So great time, and that would probably end around about maybe the early 2000s. So that's Web 1. Web 2, I'd say, was a couple of stages. So Web 2.1, let me get this numerical value right, was again a slightly more interesting time. You got faster internet, you had the emergence of Wi-Fi networks. Clearly this era was smartphone intensive as well. So the internet there was not something that you went to, it came to you instead. It was something that was always on, you always had with you. And really sort of the golden age of communication, with things like social networks starting to spring up. You can also remember MySpace and this Harvard fledgling called Facebook that appeared around about, sort of 2009, 10 time maybe. It had a lot of innovation there with this sort of read-write. It became much more sort of like omnidirectional. It was more a platform for conversation. As we moved on, so that probably ended around about 2012 maybe. As we moved on from there, you've got these, I guess, the emergence of really big tech. So you have Amazon becoming a digital provider of content. You had Facebook clearly hitting billions of users globally. You had Apple inventing things like Siri, so purely new forms of communication interaction. It was really, obviously, again, the emergence of things like Twitter. And as these platforms evolved, I think we've seen it, they became very large kind of mega corporations that would be very difficult to compete with, and very much centralized controllers of content. So they control the content you see, they control the advertising, very much based around monetizing you. The adage, if you're not paying for something, then you're the product, was really something that kind of came of age with this. And that was where we're at now. And we're starting to see Web 3 creep in. But Web 2 was really this, I'd say, that the platformification of the internet. So you have these big entities that we now, as I say, call big tech, that are the bastions of controlling what we see and do online. And frankly, like Web 3 is really a reset from that. So instead of, if you want to consider that, where we're at is Web 2.2, you've got these entities that are sort of centralized and controlled. If I want to communicate with you, Sudeshna, I probably have to go through a platform to do so. If I want to, do anything, related to social media or communication, there is an intermediary there. The ethos, or the central tenet, I guess, of Web 3 is this decentralization. So again, and I'm not going to get into the weeds too much, but if you imagine that you're cutting out the middleman in almost everything. So there's a direct connection between you and other individuals, and the network is collectively owned by you. So rather than there being a need for a central entity that is the kind of gatekeeper, everyone's the gatekeeper. It's a sort of very almost utopian, egalitarian system of whatever. So in traditional industries like financial services, where you've often had an intermediary, whether that's like a mortgage broker or a payment network, there's now the potential again for that disintermediation, where the network becomes back a little bit via blockchain, which is recording all the transactions. The network is the trusted entity rather than an individual or a company. And resultingly, again, you can probably cut out the middle man and make in many scenarios, the transaction probably cheaper, faster, more efficient. There are some downsides to Web3 in the terms of it. Again, if everyone owns it, how do decisions get made by committee? It's still in very early stages in some respects. So we've seen clearly, I'd say, the novelty value of things like NFTs being front and center as this is the state of Web3 right now. But in terms of many industries, you'll see that sort of playfulness or experimentation with content is kind of the canary in the mine for further conversations or further experimentation. So I think we're really on the cusp of seeing kind of the monetization of Web3. As I say, it is a little utopian. A lot of the sort of the truly decentralized platforms have yet to really emerge. So what we're going to probably see for the next X number of years, again, bearing in mind that financial services doesn't move very quickly, is this fusion of probably Web3 technologies into Web2 platforms. So they're streamlining processes, cutting out latency in terms of any sort of requirements for intermediaries. And I think, honestly, we're going to sort of see some experimentation, but I think the fintech industry and the financial service industry are very concerned that they don't cannibalize existing business lines or in some cases even make themselves redundant. So you're seeing at this point quite a bit of FOMO in terms of what would be somewhat legacy companies dabbling in things like blockchain and crypto, and even I'd say sort of state governments where they're looking at CBDCs as experimenting with digital currencies, but might not necessarily go into that space. There's a lot of, again, it's a big sort of playground right now, and there's a lot of scope for innovation. But as mentioned earlier, there's a lot of moving parts to financial services, and things do move at, I'd say, sort of a vegetable speed in some respects.
Yeah, and it makes sense as well because you are talking about high stakes, people's money, people's communication channels and all of that. So all of that makes sense. So what is your thinking, Nick, in terms of when do we at all expect to see not some form of people, just people adopting more and more blockchain technologies, cryptocurrencies? Like I know people like Gary Vaynerchuk will say that you have your NFTs on your wallet and your wallet will be public and all of that. So what is your thinking about where is this space evolving and how long away are we from actually seeing people's public wallets?
Yeah, it's a great question because Bitcoin's been around for a decade or more now. So you're starting to see, again, adoption mainstream a little bit in the fact that you've got people like PayPal providing crypto wallets now, and certainly sort of the larger financial institutions providing that service. Again, sort of smacks a little bit of FOMO. Again, people don't want to be left out of this and they want to provide services, the sort of one-stop shop for all things. No, I honestly think it's going to be fairly niche for a while until we find I'll put it this way, I think people are going to be embracing Web3 and crypto accidentally in some of the products and services that they come across, in that Web3 will have maybe disrupted the payment rails in the background, but they don't necessarily have to know about that. So there'll be efficiencies that people are passively witnessing through the evolution of the technology. When it comes to, again, crypto assets and the cryptocurrencies and so on, it's interesting how geopolitical instability has well, not always, but it has been a catalyst for the growth in crypto in some spaces. I think it was Greece, the potential Brexit, I think it was 2015, dovetailed to obviously a really significant leap in the use of Bitcoin by the Greek population, because Greek banks were literally going to confiscate money out of their bank account. So is crypto safe and stable? No, but is it safer or stable than the existing financial services mechanism you've got? In some cases, maybe. We're seeing this play out now with Ukraine and Russia in terms of crypto sanctions, and how likely is it that you can actually evade sanctions through crypto. But also we've seen the positive side of crypto donations being extremely impactful, and the acceleration of crypto is something that's normalized within sort of the Ukrainian population. So I think there's a lot of sort of precipitating events that are sort of accelerating crypto and cryptocurrencies and so on. But again, back to my earlier point, people like physical cash. They like, they trust money that is issued by a state government, and the whole concept of crypto. I mean, put it this way, I can't easily explain it to even my crypto friends, let alone the population at large. So it's not easy to get your head in this idea that, what was one of the analogies I heard, it's like the cryptocurrency is like having a taxi running outside your house that is solving Sudokus that you can use to buy heroin. So it's really, a little obsolete now, but it's a strange thing to explain. Or why are people mining cryptocurrency and it's costing in terms of gigawatts huge amounts for something that is intangible? But
and part of me is like, but then philosophically speaking, what is money?
I wrote a blog post on this, which we'll be publishing not too soon, but it's like, why did someone pay $69 million for Beeple's, basically a JPEG last year, right? Which made him the third most, wealthy living artist today. But it's like, well, if you look at a Picasso, it's just oil on canvas, right? If you get it down to its constituent parts, or if you look at, I think there's Damien Hirst's Shark in Formaldehyde, that is art, or is it just a shark in formaldehyde? And it's so much to do with context and scarcity and the timing of when something happens. So you see NFTs being mined or created in massive numbers right now. And it's the original Bored Apes are significant and commanding high prices. When everyone has them, it's like something you get out of a cereal packet, right? It's just that. So NFTs, I think, have been sort of an interesting proof of concept. But I think, as I say, the true value proposition is in this ability to re-architect some of the fundamentals of various businesses where there's been an intermediary, but also just the fundamental shifting of something, making something digital, which has always been fungible, into something that's now non-fungible. So the entire creative industry, we're in it as well. If I publish a piece of literature on the internet, effectively anyone can cut and paste it and they've got their own version, which is why you have things like paywalls and so on and so forth, or subscriptions for content. In the context of it now becoming non-fungible, that item is now unique, and there is a process that it's become scarce. So there's a lot in that, I think, as well. But we're just really just touching the surface on the potential value propositions there.
Yeah, for sure. And I think on that, my sort of gut feel says that brands who are already well established in the physical world will perhaps find faster success in this NFT world and probably can sustain success. So then is it in and all of that? I don't know.
Yeah, it's interesting. I was chatting with a colleague about this earlier. It's like, so as banks and retailers move to the metaverse, I'm concerned about their lack of imagination, where I don't want to go wandering around shopping aisles in a virtual Marks and Spencer's. So because it exists, let's think about the unique attributes of the metaverse and maybe how we can embrace that rather than just recreating, the physical world in a digital format. So I think we're going to see a lot of big brands experiment in the metaverse, but I think be guilty of a total lack of imagination. So I don't want the idea of lining up in a virtual bank branch to go and pay a check-in. Let's replicate the worst aspects of the physical format.
Yeah, I think it'll probably be more like the LVs and the Gucci's of the world who will probably find something nifty.
It's the audience to start with that are actually buying the NFTs, right? So they'll want to be part of the exclusive club that is enabled within the metaverse. It's all very well having a Bored Ape on your, Apple Watch, but if it's recognizing your status, if a tree falls in the woods and no one could see it, then what's its value? So maybe that is the first case. It's a place where you can sort of show off your, virtual bling in to other people that might be impressed by it. I'm personally deeply, I wouldn't say concerned, but I'd say I've seen this happen with Second Life about a decade ago. And yes, maybe the technology's moved on, but I think the jury's out on how much time people actually want to spend in the metaverse.
Yeah.
We'll see. Prove me wrong, world. I'm sure you will.
It is deeply concerning if we get to the point where you don't need to get out of your home and you just are in a virtual reality, pizzas coming to you, and you just literally. It
sounds very Black Mirror, right? And the whole thing is totally. I hope we get better at imagination. What reminds me of. There's a couple of things, but the Penn and Teller, they've been magicians for a long time. But I think it was the mid '80s, they brought out a computer game, and it was called, I think, it's like Desert Bus Journey. And it's a real-time bus journey. You're just in a bus driving across, I think, the Arizona desert for 7 hours. That's I think, well, again, exhibit A of how the metaverse, how bad it could be. So, let's pick out the attributes that are unique about this and truly do something interesting rather than just this replication of what we would be doing anyway. I'm not going to do virtual stock folding or whatever.
I am not much of a, I don't know, we shall probably see. I'm not the gamer, so maybe I'll take a standby and see where the world goes. But coming back to more, I don't know if that's more exciting, but definitely in the artificial intelligence world, quantum computing has been one of the things that has been quite interesting as well. So if we throw in that into the mix, how do you see the evolution of that?
That is a fascinating curveball, right? It's this quantum computing has been in the background for quite some time now. It's always been seen as somewhat academic and hypothetical, and certainly its impact on things like cryptography has been known, but again, it's been seen as almost science fiction. I think now we're starting to see some organizations starting to really take it seriously, particularly the potential for state governments to be working somehow on developing a quantum computer which completely upends cryptography and in many cases cryptocurrency as we know it. So it is probably time to start thinking of contingency plans for cryptographic models that will be made obsolete by this. And I think as I understand it, I'm no quantum cryptographer. I spoke to one a couple of years ago. I was very quickly lost in the sort of the acronyms and obviously quantum physics and so on. But it was, I think, as I say, the concern is quantum cryptography is going to happen now, but at some future date, everything that is public key encrypted can probably be broken with quantum computing, meaning that if you have any state secrets now, or there's whatever assets you have or cryptocurrencies or whatever that's based around public key encryption, those are now decrypted, even if this happens 5 years down the line from now, or 10 years or whatever. So it will have some pretty massive implications for existing cryptographic models. But I think in terms of the trickle-down effect of the technology, it's going to be state governments and academics, the style of universities that have this technology in a very limited form. Put it this way, it's going to be a long time, I think, before there's a trickle down for your average hacker to have access to a quantum computer. So it's a future threat. We don't know, again, the state of what's happening with some more secretive governments in terms of their development of this. But this problem is already in the mail, I think. So fascinating / disturbing, but also truly hypothetical in some respects as well at this point in time. Again, there's been a couple of examples of conferences demonstrating quantum computing. Again, I think when you kick the tires on them, they are really sort of at the science project phase of things. It's not really something that could be commercialized anytime soon. Again, prove me wrong, world. I have this uncanny knack of saying something will be years off, and then it'll be like, hey, lightning could never strike twice, right?
Yeah. So, Nick, from what you just said, it all seems like a lot of these things are in the works. So for any business out there right now who's thinking about, like the business leaders thinking about all of this and wondering about the implications of these for their businesses on the most generic possible way, what is the technology they should be looking at? What are the places they should be investing in?
Yeah, I think so. We touched on sort of technologies that are somewhat nascent. So we touched on obviously sort of everything in crypto, quantum computing. I think it's probably more important, focus, I would say, less on the technology, but more on the changing attitude of the consumer. So we've all transitioned in the last couple of years from being, to some extent, a hybrid sort of physical digital human to something that's now more digital in terms of how we interact and do our business. With that, I think you need to really think very hard about the customer experience, user experience for digital in every aspect. So, and particularly financial services, you need to focus clearly on robust identity management and knowing definitively that the person in front of you is that person. So there's going to be, again, as retail's evolving, there's going to be more stringent requirements for things like age assurance to make sure that it's not children buying things they shouldn't be or having access to things they shouldn't have. But just from, again, opening an account or whatever, it's the contrast between some of the neobanks that have come to market and the legacy banks that are out there, it's night and day in terms of the steps you have to go through. It could be as little as like under 10 steps from some of the neobanks. I've heard stories of it being like 120 steps for a traditional bank, opening an account digitally. And then you've still got to go to a bank branch and show them a utility bill and your driver's license or whatever. So personally, where most companies should be focusing is very much on that onboarding of the consumer and a focus on their digital life cycle as well. So it's not just about, even just 10 years ago, you could rely on a certain amount of foot traffic to your bank branch and opening an account and staying with you because they weren't really involved in the internet. They were quite happy with, their local bank branch or community bank or whatever, and that was fine. And to some extent, that still is fine for a lot of people. But now that assumption that they're going to stay with you for X number of years is gone. That you're more likely to build a financial product of your own that is a mixture of, if we look at what I use now, is a mixture of physical banks, purely digital banks, the payment network provide people like PayPal or Venmo over here. It's this kind of hodgepodge of different providers that will collectively form a solution for me. So I think there's two things from that. I mean, clearly there's a need for interoperability between these organizations. And I think to some extent, some of the open banking standards are getting us towards that. I also think as well, there's this need for organizations to think more holistically again about that life cycle management. And you're seeing this in some ideas, this idea of kind of the super apps for banking or the super apps for payments. I think it's incumbent on us to really focus on, again, that user experience and making sure that services and products are sticky enough that people won't move to alternative providers, but are also constantly evolving and fulfilling their needs for that streamlined activity. And that goes into all aspects of banking. I mean, the whole idea of you've got 3 business days for something to settle in your bank account when you can stream a video instantly, or I can order groceries and have them in half an hour to my house. So the idea, you're not just being compared now to financial services, are being compared to everything, video delivery, like retail delivery, everything. So the battle lines have changed a lot. You've clearly got your comparison to everything that's out there now rather than just financial providers. And it's almost on a global level as well. You're not any more bound to the banks that are in your region or even your country. You could be banking internationally or using international payment providers. So it's a buyer's choice, and I think it's absolutely incumbent on the providers, the financial institutions, payment networks to work on just making sure that the user experience is as seamless as possible. Balancing out that, knowing who somebody is definitively using, I would say, things like behavioral biometrics or telemetry from mobile signals, but also you clearly want to still have that personal touch as well. So it's a fine line. Clearly, you don't want to be sort of so stringent in terms of onboarding that people defect, but you also need to know who they are. So that's where I see the real battle lines right now. Again, this fusion of robust identity management with certainly customer lifecycle management design that is going to keep people on board for months and years.
Yeah, I think consumer experience, customer experience, data on that, their behavior, all of that, and throw inside that the privacy norms going sort of absolutely crazy in the data world, becoming more and more complex every day. So I think from what I gathered, you say it is like focus there, perhaps, and do what is best for your customers so that you retain them for longer.
And absolutely have one eye on what's happening at a macro level in terms of, people's attitudes towards crypto and their attitudes towards whatever that's changing. But it's, as you say, you've got to be, the thing to consider is we're not going back. Again, whatever's happened in the last few years, we're not going back to anything like 2019. It's that ship has sailed. The digital acceleration happened. We've now moved to a basically different way of enacting or reacting to the world around us.
So Nick, you have had a really fascinating career. Sometimes I feel jealous of all of the things that you've gotten to do, talking to a variety of people, stakeholders, clients across the fintech ecosystem. If I asked you for your biggest career lesson and your advice to anyone who's aspiring to do something like you did, what would
I'd say just be hungry. There's no other advice, and it's not even really advice. You're either passionate about a topic or you're not. And I discovered Fintech. Before it was Fintech, I did my master's degree, as I said, focused on payment technology for my thesis. And it just opened up a world to me. Self-admittedly nerdy topic, but there's a collective of nerds out there that find that the idiosyncrasies of the payments world and the retail banking world and so on fascinating. Because it is, again, if you read, huge fan of Dave Birch, if you read any of his stuff, this goes back to Babylonian times and the sort of the way that we, in fact, pre-Babylonian, as he would say, you've got so many moving parts from a societal level, from a cultural level, from a technology level, that it really is, the history of money is the history of humanity as well. So it's, from that standpoint, it's fascinating. So full disclosure, like I said, a master's degree around payment technology, but prior to that, my bachelor's was art history. So I was always historically curious. But like I say, it's, for me, just a fascinating and ever-evolving topic that touches every aspect of our daily lives. So I think it's not really a lesson. It's more of an epiphany for me. It's like, this is actually the Hogwarts sorting hats decided that I was a fintech nerd at some point. And it's like, this is what you do. So it's just that. And it's like, be passionate, be hungry about knowledge, and be humble as well. Again, I've made a lot of bad predictions in the past, which were good at the time, but got sort of unraveled. So you've got to also, take the rough with the smooth. You're not going to be right even most of the time. It's something, it's a constantly evolving platform for arguments and the hypotheses. And as we'll see with, again, today, I could be utterly wrong about my predictions here around crypto and quantum or whatever, but you go by the knowledge you have at any particular point in time.
Absolutely. We'll come back in 10 years and ask you again. Finally, one thing that I ask everyone on the show is, Nick, what is that one not so corporate thing that you do that you think has made you more successful than most others in your field?
A non-corporate thing that I do. Oh man, that's a great question. I'd say certainly have passions outside of your work environment as well. If people have known me for some time, they'll know what I'm really like in terms of my music collection, things like that. I'm a passionate old school British punk, to be honest. So there's photos of me back in the 80s with Bohemians and things like that. So, but it's always been, again, this sort of passion for the counterculture and being unusual and somewhat contrarian. I still keep one foot in the music scene there, and I think that's been, to me, very valuable in terms of just grounding you in a culture that is, from the heart as well. It's like, it's super important to have activities outside of work that are at zero connection, just for that true sort of separation of church and state. So for me, that's my escapism from, again, the day job. I love the day job as well, but it's been valuable, I think, to have just that, I guess, escape hatch from the traditions of, again, everyday living. Just get out, see noisy gigs, get sweaty, go home. I stand at the back a lot more these days, I'll say that.
Got it. So that's your refresher when you need some.
Yeah, absolutely. That's how I reset through being in sweaty back rooms of bars.
Brilliant. I will not tell anyone that. Okay, this has been brilliant, Nick. So anyone who wants to get in touch with you, where can they find you?
They can find me on LinkedIn. Look up Nick Holland Money 2020. Even my Twitter handle is @Nickster2407. You can find me on all good conferences and events. You'll certainly see me at Money 2020, both in Amsterdam and Las Vegas this year. So that'll be, I'm so excited to leave the country.
That'll be awesome. And yes, I'll leave all of the links in the show notes below. This has been such a pleasure, Nick. It was really great to have your brains on all of this stuff. And those of you who've been listening to us for this long, thank you. And we'll see you the next time. Bye.